What is a P&L, profit and loss statement or income statement, and how you can create it for your project? My name is Guilherme and I'm a project management expert. I help professionals to become successful project managers there. I do that in several different ways, from training, coaching, workshops, consulting. So if you need help with project management and you want to develop your company or your career, feel free to reach out. We are going to talk about a topic here today that's quite important. That's about an income statement or P&L. P&L stands for profit and losses for your project. And this is essential to understand how you can create a business case for your project or how you can create a business case for your company. In general, of course, it's not only to create business case for projects. All companies, they must track their profit and losses there to make sure that it's managed. Those things are managed in a proper way. So if you want to be a manager, if you want to be a director, a CEO, if you want to be an entrepreneur, if you want to manage your project properly, anyway, you need to understand what's a P&L. You need to understand how to create one, because based on that, you're going to be able to make decisions on your projects and also to manage your project or company in a proper way. So, very short background here. Let me start in here. What's very important for you to understand that all companies, they have three extremely important financial statements there. They are the income statement, the cash flow statement, and the balance sheet. Today we are, and why those are important? Because first, if you are working into an open company, this is mandatory that you release. What's an open company that has its stocks traded in stock market? So if you look for if you look for income statement from Apple, from Amazon, from Google, all this information here is mandatory to be shared. Income statement, the cash flow statement, and the balance sheet. And why those three? Because with those three, looking, of course, you need to manage the company, but looking to the project perspective into a project there, based on those three here, you can create a business case. And I'm going to talk more about the income statement. So what's the income statement and what's the goal of that one? The income statement, basically, you're going to see profitability over a period of time. You can be monthly, can be quarterly, it can be a year. You can go that for several years. Usually, if you're working to a project business case, very often you're going to see more than 1 year there. How the basic stuff, how the basics, I'm going to show you an example, but let me first introduce you how it looks like. Basically, you have the first line is for revenue. What's revenue? Think about Apple. If they sell an iPhone for $1,000, and if Apple sells 1 million iPhones in a year or in a month, whatever period of time, what's their revenue with that? It's basically 1 billion. And that's the revenue that you are going to see in the income statement. Then you have the second line called cost of goods sold. That's a very beautiful name. What does it mean? It just means what's the cost of producing something? What's the cost of the service? What's the cost of the iPhone? I mean, let's make the example of Apple. Let's say it costs, I don't know, 500 USD dollars to produce an iPhone. Well, they sold 1 million. So what's the cost of production there? It's 500 million. And then you have the first indication of the profitability, what's called gross profit. What's the gross profit in this case? Well, they sell 1 billion. It costs them 500 million to produce. So let's say the gross profit in this case is 500 million. Oops, 500 million. What would be the gross margin? So it's basically the 500 million divided by revenue. The reference for the percentage here is always the revenue. So what's the margin in this case? It's basically 50%. Then, but of course, the operation of the company does not end there, because the cost of goods sold is the cost to produce something. So it's the cost of the hardware, the cost to develop the software, the cost of the manufacturing side. But also, for example, a company like Apple, they have marketing, they have different stores, they have a legal department, they have HR department, they have management, CEO, and so on. And those come here as part of the operating costs, which is basically all the costs that the company have to operate. I just mentioned like legal, HR, the CEO, and so on, because those are not costs directly connect to produce a product, but it's the kind of what we call the company overhead, meaning the all the other types of activity that must be in place so the company properly operates there. So let's say in this case, the cost of the overhead or the operational cost of Apple is 250 million. Then you have the operating profit there. What is going to be the operating profit? Let me change the color here. The operating profit is going to be the 500, that's the gross profit, minus the operating cost. So you end up with 250 million operating profit. And what's the operating margin? It's the 250 million divided by the 1 billion. In this case, would be 25%. And then after those here, you have the other lines that comes, for example, usually companies, they borrow money from banks to invest. So they pay interest on that, or they can issue bonds. What's a bond? Basically, you're lending money for a company. If you want to say, I want to buy a bond from Apple, you can do that. So what? Every time they take money and they need to pay interest for that, it shows up here. Notice that's the interesting part that comes before taxes. So that's also one of the reasons company they do that. When they take money from a bank, for example, they pay interest, but those interests there, they're tax deductible there. So it kind of makes sense. Of course, you need to have some reasoning for doing that. It's not just taking money. Otherwise, you go bankrupt if you cannot pay the interest. But that, let's say they have 100 million that they take from a bank. If they need to pay, I don't know, 0.5% per month, and here kind of this is going to be maybe too high even for Apple. So how much you're going to lend? They need to pay 500K here in this example. Why? Because it's 100 million multiplied by 0.5% is 500K. And then you have here, what's your income before taxes, which is basically the 250 million minus the 500K here. And then, of course, you can have few extra columns here for the taxes. That's going to be paid on that. And then you have your net income, which I'm going to show you in one example how it works. The beauty of understanding those steps here is the accounting system is the same in all companies over the world, is the same in all countries. So the income statement will have the same face everywhere. So if you learn those steps once, you're just going to replicate it. Let me show you an example to try to make this land a bit easier there for you. So let me clean it up. This is just a simple exercise that I do as part of my trainings. So let's create the income statement, find what is the gross margin and what's the operating margin. And here I give you the basic assumptions. So you're going to have, what's your revenue? Well, you're selling 1,000 products multiplied by the price of the product. Then if you produce 1,000 products, you're going to multiply by the cost of production, the unit cost of goods sold, which is basically the cost to produce something. Again, the iPhone, to build the iPhone, to assemble the iPhone. If you're thinking about a car, the cost to produce the car. If it's a service, the cost to execute the service, the cost per hour there. So here you have the revenue and you have the cost of goods sold. Then you have your gross profit. That's simply this minus this one. Then you have your gross margin and you have your operating cost. That very often in project business case, you're going to see this as a percentage. Again, what's the operating cost? cost of HR, legal, IT, non-directly production related cost. The cost for the CEO, for the marketing, to keep an office building there, rent, and so on. So with the operating costs, how you're going to calculate the operating profit? It's basically your gross profit minus your operating cost. Your operating margin, your operating profit divided by your revenue. Remember, the reference is always the revenue. In this example, I just put an interest here. This is random. You don't need to calculate that in a project. If you're managing a company, you should know. Then you get profits before taxes. What's that? Basically, you're going to take the operating profit minus the interest. So you see here in the formula. Then you get that. Then you're going to pay this number here, 159K. It's going to be the reference for taxes. So if the taxes in the country, I don't know, are 25%, then the company is going to pay 25% of the profit for their taxes. Then you have your net profit and you have your net margin. What's your net profit? Your profit before taxes minus the taxes that the company needs to pay. This is what's called the P&L, profit and losses. Why profit and losses? Well, because in this case it's a profit, but as well can be a loss. If the company is not doing well, it can turn to be a loss. So this is income statement or profit and loss. What's the interesting thing if you're operating into a project there? Very often, if you're developing a product or depending on the service, you expect the business case is going to happen for several years. So let me give you the example of a car company. Let's say Tesla is developing a new model there, and they're going to sell them this model for several years. So the company is investing upfront for maybe a couple of years. So let me show you an example. Probably this one is better. So the company is going to invest a couple of years. That's why you see sales as zero, nothing being sold. The company is investing a couple of years for develop something, and then they start to sell something, and then of course you're going to have the profit that you're expected. So in a project, what you're going to do, if you're working with a product development or a service development type of project, or general any type of project that you can have a business case, that's how you're going to have. You have 2 years where you don't do anything there, and then you move to the next steps. Here again, the format repeats exactly the same. Income statement, revenue, cost of goods sold. In this case here, you have depreciation. What's depreciation? Let's say the company is investing in a new factory. The new factory is going to depreciate. While in other words, it's going to get old. So the company has kind of tax benefit there to reinvest, meaning that they calculate this cost in the production where they are not going to pay taxes for that, so they can have some type of saving to reinvest, because all assets for a company sooner or later they're going to end. And then you have your gross profit, operating cost, interest, exactly the same format. The income statement is here for you to understand. If you understand this format here, you're going to replicate everything else. And now you know also into your project, usually you are going to have several years of an income statement, combined, of course, with changes in a balance sheet, in a cash flow. But that's what's going to get you to create a business case. So going back here, the structure is always the same. Key components are revenue, gross profit, operating expenses, operating profit, net income. This helps the stakeholders here to understand how much the company is making as money or losing, and help you to make a decision. So let's say if the company wants to launch a new product, and you have, let's say Apple, they have an idea for 5 different products. One of the things that they are going to take into consideration, they are going to make a business case, something like that, and they are going to compare the different business case. Say, okay, for this product here, I expect that I'm going to have this much of profit. For this product here, this much of profit, and they take into consideration while deciding. Why it is important? Some years ago, I've seen a project that a company was working on. Then I asked the project manager, "Okay, where is your updated business case?" The first reaction of the project manager, "No, no, I'm not the responsible for that, so I don't look into that." Then it was the account manager. They say, account manager, where's your business case? No, no, I'm not updating it. After some pushing, I got them to update it. The thing is, this was probably running for more than 2 years and nobody was checking the business case. And then they found out that the company with the project, they were losing money. Because remember, again, one of the reasons why projects exist, or the main reason why a project exists, is to deliver value. So value is the ultimate indicator of project success. What happened? A lot of times companies, they are going to measure value with business case. So how you're going to deliver value into your project if at least part of this value is measured with a business case that you don't track? Do you think a project that's going to make the company lose money for the next 10 years, it's a good project for the company? In my view, of course not. That's why it's critical for you to manage your business case. Keep that in mind. And I can give you different type of examples, but the income statement, the P&L, it always the same face. That's why I'm saying that's the beauty of learning that one. Because then you can kind of extrapolate in different situations. Let's say if I want to create a business case for an optimization project. So in one of the exercises I have here in my development program there, because of course it's a project management program, but we need to talk about business case. It's how you can create a business case from an operation efficiency here. So I present a case of a call center. They have an idea to optimize the system of a call center that would reduce the time spent in your call in average. And based on that, you can create a business case. And you can see, okay, based on the savings, because every time you reduce the duration of a call, you increase the capacity there. Based on the savings, I'm going to assess, okay, what's my investment? Does it worth to do? Yes or no? That can be very straightforward and you can find limits. Okay, what's the minimum number of calls that I need to have for this to make sense? What's the investment that I need to do? Can I have something more simpler or not? Then you can think about how I can increase value for my project. But in the end of the day, what you want here is you want to learn how to move those leverage around because that's what's going to give you the important insights to manage your project. And here, just putting quickly here, the formulas, how you're going to calculate the margins, the percentage margins there. Remember, the reference is always the revenue. And why I'm saying that, because a lot of times doing training, people kind of forget. It's always the revenue. And that will give you the reference, okay, what's your gross margin? Gross margin, you're going to hear very people talking about GM. What's the GM? Or sometimes people call it, what's the OM? Operational margin there. What's the net profit margin there? Those are important. Let's say you're a manager, you enter a meeting, they say, okay, what's the GM of the project? If you do not understand what's a GM, you are not even going to be even able to follow the discussion. So remember that this is an income statement. Income statement. So what I teach you is what's income statement, what's the structure of income statement, which again highlighting it's the same in all companies. They might slightly change how they call it, but the structure is exactly the same for all companies. So learn that, rewatch this video, share with more people because if you understand this structure here, you can understand any type of income statement. This is the first step to be able to understand your income statement and the first step, of course, to be able to create one. I just show you how you can create one. We did it together. So this is quite important. If you have questions, feel free to ask in the comments here. Connect with me on LinkedIn, connect with me on Instagram, send me your message there. Let's talk. Finance, it's critical for project management. It's critical to be successful as a project manager. Finance is critical to be successful as a manager, as a director, as an entrepreneur there. You need to have this knowledge there. And of course, don't forget to follow me for more content and like and share this video here so it can get more people start to learn finance. Thank you and see you soon. Bye.